Warren Buffett has a warning for growth investors. What is happening, investors? It is your boy Jack. I am not a financial advisor. Yesterday I made a video speaking about Cathie Wood and ARK Invest and what they have been saying about the broader growth market, considering that, you know, a lot of their funds are down 30 to 35% and it's been a rough period of time for everybody. A lot of you guys seem to enjoy it, so I said, let's speak about what Warren Buffett, Charlie Munger have had to say in recent times. Obviously, a very different kind of management team than Cathie Wood and ARK Invest. So you'll more than likely be aware that the Berkshire Hathaway annual meeting and Hyliion's report happened earlier on this month. And there was a few points from that report that I want to speak about in today's video. They all still stand true. The market's in a very similar place to where it was at the start of May. He specifically speaks about growth investors, the influx of people using Robinhood, comparing it to casinos and the likes, and a few other very, very interesting points that I think, again, could help broaden our perspectives on the overall market. And to the people who aren't really sure what they want to do with their portfolios, it doesn't hurt to get information from as many sources as possible. So right before we do get into today's video, before we get into the juicy information, could I please ask you to hit that even juicier like button, my friends? I really would appreciate it. Drop me a comment down below. Let me know what you think about what Warren Buffett has to say, and do you go more on the side of Warren Buffett right now or ARK Invest? And if you are indeed new around here, my friend, please consider hitting that juicy red subscribe button and joining the family of investors. If you're interested in joining my private Discord group, that'll be the first link in the description, and in there you get access to all of my buy and sell alerts. There's loads of different channels to speak all things stocks. And if you like 2 free stocks on Webull, that'll be the second link. You gotta sign up and deposit $100, get some free money. Really is that simple. So we're going to start it off here on Investopedia. 5 takeaways from the 2021 Berkshire Hathaway annual meeting and quarterly earnings report. So I'm not actually worried about how Berkshire Hathaway performed. I'm more interested in what these guys had to say about the broader market. So Buffett said, "I do not think the average person can pick stocks." And he has said this since the beginning. Literally, he's always said he thinks that for the everyday person, something such as the S&P 500, he always quotes as being a much better investment for most people, because simply put, they can't pick stocks. And he of course goes on to elaborate why. There's a few primary reasons though. He speaks about the fact that, you know, the 20 biggest companies in the world now, not one of them was on the list back in 1989. So times can change very quickly. And he also goes on to speak about the fact that you can't just invest in these growing industries. And I think that's a very, very important one right now. 2 very prominent markets that he is pretty much referring to here are going to be things such as the cannabis market and then also the EV market. I think this is something that most people will be aware of, but it's not bad to remind yourself of it every now and again. It's like these markets are growing and a lot of wealth is going to be created through them, okay? But not every company in every emerging sector is going to perform well or is going to be here in 5 years, 10 years, or 20 years down the line. The simple truth is that the large majority of them won't be. That's why Warren Buffett says he doesn't think the average person can pick stocks, because the large majority of them aren't going to do very well in a longer time period. Yes, a lot of them may do well over the next 6 months, 12 months, a couple of years. A lot of them won't be here in 10 years. That's why when it comes to EV, a lot of people would consider Tesla to be the safest bet. They're the most established, most far ahead technology-wise. Then you have your Neos and a lot of the other Chinese companies, etc., etc. And to elaborate on this point, he goes on to say people get inordinately attracted to industries. Now, this is a very interesting point, because again, I want to make some comparisons towards Cathie Wood and ARK Invest, because obviously they have different ETFs for different subsectors to an extent. We have their ARK, which is general innovation. You have their ARKW, the ARK Next Generation Internet ETF. Recently, we've seen their new ARKX, the Space Exploration ETF. But if you followed Warren Buffett, you know that all he really cares about is value. He is a value investor at the end of the day, so he will invest anywhere where it makes sense to from a value investor's point of view. He goes on to use the auto industry as an example and observe that there are more than 2,000 defunct companies in the US alone. By 2009, there were just 3 US automakers, of which 2 were in bankruptcy at the time. And then one very important one. We've had a lot more people in the casino. Buffett directly referred to SPACs as an exaggerated version of gambling. Pretty bold claim. I mean, realistically it is, because you have to remember that it's a lot of institutional investors who are putting the big money into these SPACs. They get to invest before the everyday investor, you know what I mean? Now, it doesn't particularly surprise me because they are, you know, old school investors. They are very value, very dividend focused. Well, that was a pretty bold statement to be made. And again, go compare that to somebody like ARK Invest, who currently is investing and in the past has invested in many, many SPACs. SPACs which are completely and utterly pre-revenue in their very, very early growth stages, and also SPACs who are established. And then in regards to Robinhood, Robinhood has been at the front of a lot of controversy as of late. I think everybody knows this. Buffett said they are adding to the gambling problem in the markets. He is eager to read the prospectus whenever Robinhood goes public to see details on how they make money while not charging commissions. Munger decried these apps as god-awful, deeply wrong. We don't want to sell things that are bad for people by running lotteries. The states are just as bad as Robinhood. They push the mafia aside. A lot of bold statements coming from these OGs, you know what I mean? Fair play to them. But I mean, I can see where they're coming from with Robinhood. There is definitely a lot of gambling that happens on there. And people have brought up this point in the past. I mean, you even go onto the app. I can't use Robinhood, but I've seen the interface, and it's very easy to just click buttons and to buy things. And then options, it's very easy to trade on leverage. There's a whole lot going on that more than likely shouldn't be available to the everyday person who just wants to invest some of their hard-earned money into stocks. They're the biggest things they brought up in regards to growth investors, and I just thought it was very interesting to see the contrast being brought up by these guys. And there did seem to be quite an attack on people who are focused on these higher growth or hyper growth type companies, especially with the longer term outlook. Now look guys, I think it's very important to be very cautious when you are investing in companies, especially in emerging sectors, especially ones with poor balance sheets or are pre-revenue. It carries a lot more risk than going for some of the safer companies that the likes of Warren Buffett would be interested, or it's much higher risk than putting your money into an index fund such as the S&P 500, of course. So I understand, and I think these warnings are warranted, but I also do think they are quite biased. I don't think that the full picture is being painted whatsoever. And again, that's why I wanted to make this video in particular, especially after making the one on ARK Invest and Cathie Wood yesterday. Because the fact of the matter is there is no absolutes in the stock market. There is no absolutes in the investing game. And as I always like to say, you have to form your own thoughts and opinions. Not only when you watch one of my videos or a YouTube video, but in regards to your philosophies and your thesis in the market, in investing in general. I mean, these guys have been against crypto, etc. from day one. Munger came out and said, I don't welcome a means for paying kidnappers and extortionists in regards to crypto. I mean, these guys are old school. They still hate these things, simply put. But if there is anything to come out of this shareholder meeting for the everyday investor, it is the warning for growth stock investors. How dramatically the list of top 20 companies in the world by market cap has changed since 1989. None of the companies that made the list then are on it today. I mean, that is an important and realistic point you have to come to terms with. Is Apple still going to be in the top 20 biggest companies in 20 years to come? Who knows? Is Tesla going to be up there? Is anything that we know of today going to be up there? Or is it going to be all brand new companies? But with that question being asked, is there not a slight contradiction being made by Warren Buffett and the team here? That if you do want the absolute best returns, and if you want to invest early on in the companies that could be in the top 20 biggest companies in 20 years to come, you should be willing to allocate some portion of your capital to these higher risk investments. Because simply put, most people won't invest in what are going to be the 20 biggest companies in the world in 20 years time until they're already very well established and very big. But if you are able to somehow decipher them, I'm not saying that I can, I'm not saying that most people can, but if you can figure them out, you're going to make a lot more money. It's just something to think about. There is to an extent some sort of a contradiction there, and I think it could have been better explained. I think we're all aware that they haven't really been buying as much in general over the last year and a half. A lot of people were very surprised back in the crash of March and April of last year when they weren't really buying much at all. And in fact, they sold a lot of things at the bottoms, airline stocks being the absolute biggest one. You see, they sold 6.45 billion of stock in Q1 and bought 2.57 billion of stock. So still, like, they're selling more than they're buying right now. It's quite interesting, considering the fact they're sitting on a cash pile of $145.4 billion. And I mean, we've been waiting for a year to see this get unloaded into something huge. But what do you guys think? Do you side more with Warren Buffett? Are you more of a value or dividend investor? Do you look for value wherever it is? Or are you more like me, and I know a lot of you guys who are watching, do you really want to find the next big thing? Do you really want to be involved in the high growth industries? And do you understand those risks? But anyway, my friends, that is all I have to say on this. But I wanted to make this one to hopefully spark some discussion in the comment section. So if you have watched all the way till the end, please do let me know your opinions on what Warren Buffett and Charlie Munger have had to say over this last while. If you have watched all the way till the end also, you, my friend, are a true legend, and I appreciate you being here from the bottom of my heart. Your support means the world to me. If you did enjoy the video, could I please ask you to hit that juicy like button? Maybe subscribe if you're new around here. Again, if you're interested in that private Discord group, that will be the first link in the description. If you like those free stocks, that's the second link. Anyway, guys, I hope you all have a blessed, beautiful day. I'll see you for another video very soon. Peace.